Did anyone trade the PM session like this? Essentially right here, higher low, higher high, higher low. Yeah, let's just use, this is our change in state of delivery. So let's see what we have today. So we already took out PM session low, but not the Asia session low yet. We took out today's Asia session low. We also left behind some nice SMT divergence. Because if we head over on to NQ, we see that we do not have swept the Asia session low. We still have that available. NQ even failed to take out yesterday's high. Yeah, the high we created at 950, something around that. So after taking the all-time high, and now if we take a look at the S&P, we also have some bearish SMT with that. How awesome is that? That's great. That would have been a nice shot. So now I finished my banana. Gotta get some breakfast in. Alright, let me open up Discord and see if we have any questions. Giving up the New York AM session. Interesting point. Well, try it out. Especially if you have time around that, day of time. For me, that's usually 7, 8 p.m. and I tend to be exhausted at that time. And I'm not really fresh. That's what I really like about trading the London session. I just woke up, I took my dog for a walk, I had a cup of coffee, getting mentally prepared to trade and all that stuff, and I already accepted yesterday's profits, drawdowns, you know what I'm talking about. It's a fresh day, and if you, I don't know, if I would start trading at 8 p.m., I don't know, so much stuff happens throughout the day that could end up being emotional baggage, where you like try to take it out on the marketplace, and I'm not really a big fan of that. So starting out fresh is really, yeah, I like that part about every London session. All right, so let's see, we retested this hourly inversion fair value gap right here. See that? We closed below, we just retested it. Now we open up with a volume imbalance. It hasn't been filled yet. Let's take a look at NQ. NQ retested the VWAP. Still holding this hourly fair value gap actually. Also above the midnight level, but yet still didn't clear Asia sell side. And I think that today we are going to, or first of all, before we move anywhere on NQ, we are going to take out lows. I'm pretty sure at least, even though this essentially is a 2022 model right here, without, that's important, without us having taken previous session sell side. So we have our market structure shift right here. We have our breaker block right here. We have our midnight level So theoretically, we should see this hold. Let's go in a paper trade right here and see if we can take that higher into buy side with our stop below this candle slow. A 15-minute time frame inside a 15-minute bearish, 1 hour time frame. Nice rejection wick on that previous hourly. Filled in this hourly bearish. Interesting. Let's see how that's going to play out. So in terms of volume imbalances, we have Powell speaking today at 9. That's also one of the reasons why I'm going to miss the AM session. Okay, right here we have a inversion fair value gap. After we cleared the Asia sell side liquidity, we have a bullish fair value gap right here. A bullish fair value gap overlapping with the volume imbalance. We have a buy side target. What's in our way? This bearish fair value gap. And this one right here that has already been used to deliver price lower. Consolidation around the VWAP, turn around, break below the VWAP, retest the fair value gap, and turn around. Swept this low right here, a little stop hunt before the reversal. On NQ, I actually entered a long here too on my funding pips London session account. Target being the Asia session high. All these equal highs essentially here. And I'm going to take a partial right here. Let's see if we have some questions. "15 seconds until we close." What's the DXY up to? Look at the DXY. Just like we outlined and talked about Bongo Rambo, isn't that crazy? We talked about it right here on Friday when we did the weekly outlook. We saw this gap being filled, looking like a sweep, and then we were asking the questions, are we gonna push through these bearish fair value gaps and flip them? Or are we going to continue lower from them? We got our answer right here once we closed above them. After closing above them, we came back to retest the bullish fair value gap and test all these inversion fair value gaps. We never closed below the highest inversion fair value gap. We closed inside of it, opened below, but we never closed below. Bullish engulfing candle, and that momentum is just going to continue. And we outlined that yesterday. So now we hit that first high. Dollar is gaining strength again. After this little retracement, we started out 2024 pretty strong. Retraced. After taking out some internal buy-side liquidity, we had a change in the state of delivery until we swept some internal sell-side liquidity right here and filled in this unfilled volume imbalance right here, this new weak opening gap. After we have that filled in, we consolidated at the low, which made me curious, and then we had a momentum candle to the upside, close above the lowest inversion fair value gap. And from here we moved. So really what I'm looking forward to is to see this new week opening gap or new day opening gap being filled in. We've never traded in this area, so I'm really looking for higher prices on the DXY. If we were to measure out the most recent manipulation, essentially it would come down to this leg. And now if we look at standard deviations ICT, which don't load up on the daily time frame because I modified the settings, we would be looking for those targets. 1.5 standard deviations. So just after we hit the 50% level of this retracement right here, we started to turn around. And right now we're somewhere in between. Let's see. Let's take it one step at a time and do not try to forecast what's going to happen 10 years in the future. NQ, close above the VWAP, took out the first high. Let's see if we start to hold support now. To continue higher, ES closed above the VWAP, closed above this bearish fair value gap, so we turn it into an inversion fair value gap. Now we want to actually see it continue instead of reversing. 15-minute inversion fair value gap right here. Let's see if we can hit it. Or if this was just a fake out to take out those highs. I really want to see the support of the midnight level now, and ideally this inversion fair value gap. On NQ we could be looking at this bearish fair value gap. Right here. We pushed, we tried to get above it. We actually closed above it right here, and from here on we started to hold support. I wouldn't want to see a break below that. Even though NQ, at least on the lower time frames, tends to not respect fair value gaps as well as ES, for example. All this is happening also inside a new week opening gap, but I don't think it's this week, it's from the last week. Yep, pretty much. Omar. Take out the low, invalidate the lowest bearish fair value gap. We have a unfilled volume imbalance. Alright, so we close above all that. We leave behind bullish inefficiencies. Pretty simple. We get in on the inefficiency, overlapping with the volume imbalance, place our stop just below this candle's low. We don't even have to give it the full 3.5 points. 2.5 points should be fine. If you want to maybe add 0.5, say safety measurement, do it like this. Target a 1-to-1, and that's easy, 3 points. 5 points. Now you can let, I don't know, the rest run for 10 points with your stop loss right here. Retested the midnight level, held above this inversion fair value gap. Let's check out NQ. NQ also kept on respecting this inversion, closed inside of it. Let's see if we can hold it and push higher now. Yeah, there's still some people. Trust me, I have a couple of friends that tell me, "Oh, well, the recession is gonna come," and they've been saying that ever since we go to the daily time frame here. Ever since, sorry, ever since he essentially, nah, yeah, since 2022, then we retrace. Nah, that's gonna turn it around. You're gonna see lower lows and blah blah blah. Completely missing out on the opportunity. And now at the all-time high, yeah, just a bubble. It's gonna pop. Blah. Eventually, it's gonna pop, but it's not worth missing out the gains to the upside. Waiting for the top to come in. Not that it matters for us anyway, scalping on the low time frames, but well, not everyone's doing that, and just for a long-term investor, it would make sense. Nice. Look at that perfect piece of price action there. We swept the Asia session low with SMT divergence. I still think that we could hit the previous day's low. Oh, well, we will see. But yeah, from here, how did we move? We took out sell side. Did we continue? Did those candles show any interest of continuing lower? Well, how could we tell? We look at bearish fair value gaps, those volume imbalances, and see if they have been respected to get a feeling of what order flow is like right now. We open with a gap to the upside. We push immediately to the 50% of our lowest bearish fair value gap. All right. So what's the time? It's also 3:35. So we turn around once again at that 30-minute mark. I can't stress it enough. Turn around at around the 30-minute mark. Doesn't have to be exactly at the 30-minute mark. Could also be 35 or 40. Just that timing window. And of course, you have to make sense out of it because, well, doesn't like to turn around at a random place, but I wouldn't call this random after we just swept the Asia session low. So we take out that liquidity, we turn around, close at the 50%, immediately push above it, and not just by a little bit, with strength. We close above the unfilled volume imbalance, failed to hold resistance there. All right, what do we leave behind on that very next candle? A little bullish fair value gap and a inversion fair value gap. Of course, now some ICT traders out there, they want to get their entry at the lowest bullish fair value gap with a stop loss like this for the 10 risk to reward ratio all the way up into buy side. But that's just you asking for not getting filled. I mean, of course, you can have a limit order right here, but why not try the highest bearish fair value gap, give it a little bit more room, and actually make some profit? You can always add at these lower entries, but well, that's at least what I recommend entering once you have that crystal clear confirmation on that highest bullish fair value gap. So now the London Open happens at 4 a.m. We happen to take out this low. Our stop loss is still here. We're not worried. We sweep that low, immediately turn around, and now we're pretty good. We can move our stop loss to break even off this highest bullish fair value gap and watch price as it continues higher. Once again, by using fair value gaps. So now we're at VWAP. We have our first inversion fair value gap up here. We end up holding support. Push now above our next bearish fair value gap, and the only bearish fair value gap that essentially holds us between the short-term high and where we are right now. We also just hit this volume imbalance right here to the tick. That's how we can look at price action, yeah, essentially step by step without really having to worry. You know what I mean? We can keep on marking out those volume imbalances because they play a crucial role. They're even more important than some of the fair value gaps, especially the unfilled ones. Because, yeah, I don't know, I'm talking to the accumulation zone OGs here. You guys know that by now. what a unfilled versus filled volume imbalances, but for the ones that don't, this is a unfilled volume imbalance because after gapping to the upside, we never came back to fill it in. So comparing it to this volume imbalance, we opened with a gap. On that candle that opened up, we had a wick to the upside, filling in this gap. Here we didn't. So I really put more emphasis on that. And once we come back, we end up holding support here. Same thing here. We come back close above it, and we bounce off that exact level. Those unfilled volume imbalances are really important to watch out for. Right here we have another one. I put more priority or focus or emphasis on them if they happen during higher volume times, because during the HS session we get them rather often. But yeah, you can also use the ICT all-in-one, by the way. If you go over here to the settings, you go to the control panel for ICT concepts and you turn on multi-time frame volume imbalances. And down here in the settings for the multi-time frame volume imbalances, where are they? You can select the time frame, how many volume imbalances you want to see displayed, if you want to see them extended, and then it's displaying essentially the last 10 volume imbalances on your chart. I don't really use it, to be honest, because I prefer doing that work myself, because then I also understand which state we're currently in, if that makes any sense. If I just see them, I know they're there, but I don't really see, okay, where they originated from. While I'm actually looking for them and drawing them out, I see where they come from, if they have been respected so far, to, yeah, potentially see if they will be respected again. One more minute to go here. For a bear market, you need a strong bearish closing week first. Exactly. I wouldn't. That's exactly the thing, Omar, that you just described here. Of course, the lower entry would make sense because your target's, well, I mean, your target is pretty far away, and it always depends on what you're looking for. If you're coming into the space, you just learn about ICT concepts to essentially find a way to catch 10-to-1 risk to reward trades. You're gonna try, but I can guarantee you, you're gonna fail. I think what really changes it are those quick and nimble moves, getting in quick, getting out even quicker, taking your profit home, and managing your risk wisely. Not over leveraging, not over trading, and yeah, taking it from there. So it doesn't matter on which inefficiency you get in. If you manage your risk well, you can scale in, you can partial out, doesn't matter. But if you get in here and you just look for 2.5 points with too many contracts with barely any risk, you're out here before the London Open and you made your 250 bucks. You can take off one mini contract, leave one to run, moving your stop to break even. But of course, if you look for those 20-point moves during the London session, your win rate's going to be much lower, and yeah, those moves are going to be much harder to catch. And after you see this bullish candle, and you see this candle retracing a lot, you don't need a fair value gap to really enter. You can just buy that dip and anticipate order flow to continue higher. Why would it turn around right here? Because if you're right about it, you're right about it. And if you're wrong, well, you lost a little bit. But price usually tells you rather quickly. Yeah. All right, there we go. Up 2%. On NQ, look at this volume imbalance, baby. Nice. 2% profit. Done. Don't even really have to hold for more here on NQ after taking this 2022 model. Not really interested to hold much longer. I'm fine. I'm fine with that. Even if it happens to be that 10 risk reward reversal. Because the next area of resistance we have to break above is this bearish fair value gap. We have a couple of equal highs here. And then essentially our current high of the daily candle at 5311. But note the time. I'm saying it right now. We said it yesterday too. We're at the 30-minute mark. And for the first 30 minutes of the new hourly candle, what did we do? We moved to the upside. And we like to do that during the first 15, especially 30 minutes, to trap traders into believing, oh, that's going to be the reversal. And most likely, if they didn't get in here, they're excited and start to FOMO up here. So they try to trap them. And then they pull the plug and turn it around to deliver it into the anticipated target. Because you got to be smart about this if you're a market maker. You cannot just say, oh, we're here. If we continue lower like this, well, we're going to make enough money. That's fine. You want to make most amount of money. You want to create liquidity, trap your fools and retail traders into one specific direction before pulling the plug, liquidating all their positions, which means you making money, before actually moving into a specific price target. Perfect example for that would be no, not right there. What we saw yesterday. We're at the all-time high. We keep on pushing. Traders getting long, and every time we reject, they're getting short. So they already made a bunch of money here. They push again. People start to FOMO. They're looking for that continuation. They never get it, and then it slowly falls over. A little bit too slow for my liking. But, well, turn around. So let's see, we closed above this volume imbalance. Can we continue? We open up with another volume imbalance. Right here, I don't like unfilled volume imbalances. That's always a sign for me that price is likely to return to those areas. Eventually, sooner or later. Doesn't have to happen right now. But especially if we just took buy-side liquidity and we leave inefficiencies like that behind. Always just a little bit more careful. Yep, price action today is beautiful. Not gonna lie. And it was beautiful yesterday as well, during the London session. 4 a.m. we are at the extreme. We turn around, momentum shifts, we close below our highest bullish value gap. We retest it, we keep holding below it. We have a unfilled volume imbalance right here, and all this trend line liquidity essentially. Because all we did was continue higher. Market is trapped long, so what's the easiest money to be made? Is it if we continue higher? No, not really, because we already have a lot of Asian session traders that are long. Okay, what's the most amount of money to be made? Well, first of all, we're gonna stop all these out. They get liquidated. We make some profit. At the same time, while they exit their long positions, they're essentially selling. And if someone is selling, market makers can start buying. That's what they did right here before they continued up higher. While retail traders are already trapped short again. Of course, it's super easy to see that in hindsight. Real skill comes in when you do it live. And that just takes time. What's the time? It's 4:30 now. So instead of turning it around at 4:30, we actually pushed. Interesting. So that might be a sign that we are going to continue into that buy side we left behind. And usually, I don't know, that's just my feeling. If you hit a London session like this, there's not even a reason for you to trade the New York AM session, at least on the same account. Why? Stash those profits, especially if you're already funded, and get them paid out. That's what I like about Take Profit Trader, because I can request daily payouts. Let's take a look at Ethereum here and see what we're looking like on the hourly time frame. No, it doesn't look interesting. I took that long here, but I secured most of the profits already. I started trading cryptocurrencies because they deliver very nicely. Unless you look for those 20-40% moves on the hourly time frame, they do happen, but I'm not here for that. I'm a fan of catching, I don't know, 3, 4, 5% moves with some 10x leverage, or sometimes even 50x leverage. After a nice market structure shift, like right here, get it on the fair value gap. 3% with a 10x leverage is already 30%. Take some partials there. Especially if it doesn't like to continue. That was a good one. Got right in here on that breaker block. 10% move. Now we're inside this 1 hour bearish value gap. Let's see if we can continue. Once again, there's no reason for price to do that. Yeah, we had a wick to the downside, but that's it, just a wick. Close with a doji. So far we don't have any sign that tells us that we are not going to run this Asia session buy side. And once we hit that, well, looking at the 1 hour time frame, it looks rather bullish. At least bullish enough for us to run. Well, essentially, after we formed this all-time high, let me hide the ICT all-in-one right now. Do a little bit of a outlook right here. So first of all, I want to outline this bearish SMT divergence between ES and NQ. It's Friday, it's the end of the week. We will see if this is just a retracement after we ran up here on Wednesday. Retrace a little bit before we continue higher. I don't know, it would make sense. We have bullish SMT right here, on the S at least. We have a left shoulder, head, right shoulder setup. Let me put all these into a 5-minute time frame folder and hide it quickly so we can look at the 1 hour time frame by itself. Delete this 1 hour time frame to make it simple. What are we working with right now on the hourly? First of all, bearish SMT divergence. Our let's extend this out to Friday, Sunday, 6 p.m. Our high of week. Top, right, 12, black, and 1 fig. Our high of week right now. We have a change in state of delivery because if we look at most recent structure, we formed a higher high, higher low, a higher high, a higher low, and then we failed to form a higher high. We had our change in state of delivery. We formed a lower high, a lower low, and right now the question is, we still formed a lower high here, but a higher low. The question is if we can see our first higher high. And you can just see it by looking at it if you studied classical charting patterns. I love them. Good old head and shoulder setup. Of course, you could also say it's a 2022 model, but I don't think it's a wrong thing to combine those two things. So let's look at market structure. Now we take a look at the fair value gaps. We have a hourly bearish fair value gap right here. We have a inversion fair value gap that has been used as support previously before closing below it. We haven't retested that yet, so we have our bearish fair value gap, inversion fair value gap, and another bearish fair value gap. Pretty big one actually. We have a bearish fair value gap right here, which has been respected perfectly. Question now is if we can close above it and we get that answer or that information in 15 minutes. We have a bullish fair value gap. And a inversion fair value gap down here. That's all we need to get a good sense of what order flow is like right now. Like I said, keeps on pushing. Don't really have to worry about that. 445, new 15-minute candle opening. So that's everything on a 1 hour time frame, essentially. Let's check out the 4 hour. On the 4 hour, we don't even see that bearish change in state of delivery. We took out the all-time high, yes. So we can also line that out. That's our previous week's high. We didn't retrace into this huge 4 hour inefficiency. We are aware of it. So we could see some potential rejection in here to deliver into that later today. But that's about later today because, yeah, right now we're trading the London session. Unless we see something on a lower time frame inside that area, we could also use the ICT fib retracement here, for example. Before we reach the 50% level, I'm not really interested to take a 5-minute time frame bearish setup. Once I see it above, maybe the 61.8, close of this candle right here, the order block essentially, yeah, I would be more interested. But for right now, nah. We might get some short-term retracements after we take out the high of the day. but not the potential reversal, which we could expect inside that area to fill in the value gaps we left behind. One step at a time. Especially with the DXY pumping like this. But also keep in mind that if you trade the indices, what happens on the DXY doesn't correlate with the indices at that exact point in time. If you trade Euro US dollar, then looking at the DXY makes a lot of sense, because if you see the DXY going up, we can look over at the Euro US dollar chart and it's going down. It's always like that. Always. And if not, you know that there's some manipulation going on. But with the DXY and the indices, if we look at the DXY over the last week or two, we saw the DXY trend up higher. Well, what did we do on the indices? Well, of course we consolidated, but we're also pushing higher, and you would never see that if they really were as correlated as some people, I don't know, use it for. That's actually interesting. We have a big daily bullish fair value gap here. I'm gonna mark that out. Daily fair value gap. Bottom. High of week. Now we can break it down to the 5-minute time frame. Tidy everything up for the OCD. Put everything into a folder, call it 1 hour. What's that? Group 1. From Monday. Don't need that anymore. Now we have a understanding of how far this could potentially go. And what targets we have. Point out main fair value gaps that have been used as resistance a couple of times. The key areas essentially. For the lower time frame. Then we can just watch it. What's the timing now? It's 4:50. I don't know, honestly. I kind of feel done for the session. Not sure about you. Did you guys catch along? I mean, we just started the stream right here, and then we talked about nice 2022 model. Taking along here. Once we saw this super bullish candle, buying on that retracement or right at the midnight level, or on this order block right here. I don't know, kind of a no-brainer. Any other topics you want to talk about? No, we want to turn on the ICT on a one again. It's hard to believe, but some people do use the messaging feature on TradingView. Some. I'm not an expert on order blocks. Well, I don't like to look at candles like this, especially during the Asia session, as a order block. I know we turn around from that area, and we could look at that highest up closing candle as a order block. Yeah, I'd say so, but right now I'm more interested to essentially see support on that flipped order block here. I don't know. Essentially, the most order block, if I use order blocks most of the time, it actually ends up being down closing candles within an uptrend. Right here, come back to retest the down closing candles, or after the market structure shift, right here, down closing candles, retest that. That's essentially when I use order blocks. Down closing candle, we close above it, come back to retest it, down closing candle within the trend, retest, down closing candle, retest the down closing candle, retest the down closing candle, and continue higher. That's most of the time when I use an order block. I don't know, you would anticipate this to be an order block because we turn around from here, yet price went below it. I don't know. That's just the way I look at it. Some people might not agree. Die-hard order block fans. But usually there's some nice liquidity just above and below order blocks. Yeah, same thing. How do I know if we're going for liquidity or not? If I see momentum into one specific direction, would be the first answer. And I don't have to know. That's the thing. So, of course, I would be looking now for this liquidity, but I already understand that we took out plenty. And then for a London session, we already had a decent move. We are about to open a new hourly candle. We will see. So right now, I do think it can continue higher. I'm not going to take an entry right here. We already caught the majority of the move from down here or right at the midnight level. And by then, I already secured my partial, moved my stop loss to break even, so I'm in a risk-free position. Then I'm just watching it for potential invalidations of, basically the trend continuing higher. The final buy side target. Essentially going with the flow. You never know for certain that liquidity is going to be hit. You play the probability of it being hit with good risk management. You look for changes. For example, when we used to respect bearish fair value gaps, we hit a major liquidity target. All right, you're still short, for example, with your stop loss at break even from the entry right here after we shifted structure. bearish fair value gap. We continued lower. You hit your final target, but you might still be in with one mini contract to see if it wants to run into the previous day's low. Well, and then your stop loss is already at break even. When can you get out? Well, once it invalidates that idea, especially after we hit major liquidity. We hit a previous or the current session low, Asia session low, leave behind bearish fair value gaps, but we stop respecting them. All right, that's your first sign. And then you start to respect bullish fair value gaps. Now that's really where that change in the state of delivery for me comes in. Continue higher from here, sweep the low, and by the time at 410 we essentially, your stop loss at break even would have been hit, and you would have been able to tell at this point in time right here that was your indication to get out, and you'd still get out with some profits. Nice to see that we now use volume imbalances after holding resistance here as support. This inversion fair value gap now we're holding at the 50% level, retesting the old high to continue into buy side. And then, yeah, one of the other easy things you can do to get out is simply to do standard deviations of your final manipulation leg. So we form the market structure shift, the lower low, lower high, lower low, lower high, lower low. We shift market structure, leave behind the breaker block, we use it. So now we look for standard deviation points to get out. A good standard deviation point to get out is at second standard deviation or simply at liquidity. And while speaking about it, on that new hourly, just 1 minute before the new hourly open, we hit the Asia session high on NQ. And I think we're about to hit it on ES as well. Now that's more in relation to order blocks and why I don't use them. Yeah, fair enough. I'm a fan of using the most recent order block. And that most recent order block, yeah, okay, I don't know, on a 15-minute time frame would have been hard to tell. Maybe on a 1-minute time frame. No, also pretty hard to tell, if we're being honest. Order blocks. Well, to be honest, I wouldn't even know what exactly to backtest. I've been doing well without them, so I don't think I even need to add them. Don't really want to say without it. The highest probability order blocks, in my opinion, are, let's see if I can find an example here somewhere on the 5-minute time frame. More likely to see one on the 1-minute time frame. No, maybe if we're lucky. No, not here. That's the type of order block I use, or I like. But yeah, most of the time it goes hand in hand with a market structure shift, reversal setup, breaker block, inversion, fair value gap kind of stuff. I can point that out here quickly. Where are we at? Oh, all the way up here. essentially once we, for example, are in an uptrend and we have candles like this. Now, let's see, let me try to make that clear. Those are the highest probability order blocks just from experience. So we are in an uptrend, for example, not looking at the order blocks at the very low of a trend when we get the market structure shift, but high probability order blocks that happen within a trend. So we're moving up higher with higher lows and higher highs. Then we get one dip that goes below a higher low, but we immediately turn around, retest it, and continue higher. So you could also call this a unicorn setup within the trend, essentially, because we had a fake market structure shift to the downside, a new market structure shift to the upside, a fake out essentially, and we hold support on the highest up closing candle, which essentially would be your flipped order block. But what I would be looking for is that down closing candle, ideally with no wick to the upside. That takes out a major swing point. So like this, for example. Takes out a major swing point, no wick to the upside. We open up, immediately engulf that candle. Maybe a little wick to the downside. Immediately engulf it. Less of a wick we have, the better actually. We keep on going. But before reaching the major, draw on liquidity, what I would be looking for is essentially this down closing candle, which took out on that very specific candle, the short-term low. I would look for support right here on this down closing candle. So for essentially for this candle or the very next candle before hitting the buy side level, to come back with a wick to either fill in, that would be the highest probability setup, ideally also with a fair value gap right in here. So this essentially would be our fair value gap. We don't get that every time. Retrace into the fair value gap, and I would just enter on the high of the bullish fair value gap before we hit buy side. Or if it retraces a little bit deeper, this order block. Because we just swept sell side with it, took out a higher low, turn around immediately, and then that order block setup gets even better if we leave behind a bullish fair value gap. And then that's just the easiest play to take before we hit buy side. Does it make sense? Do you have any questions about that? Feel free to ask. So that's that highest probability order block setup I know of. Besides the one we already know. I mean, here that would have also been one of the examples, but without us taking out the slow here at 10:40 p.m. yesterday. We have a tiny little bullish fair value gap, but the main point is that we took out two short-term lows. But instead of continuing lower, what we would have assumed, we immediately turn around with a nice bullish engulfing candle. We come back to retest that down closing candle, turn around, hold support, open with a volume imbalance, and shoot up. Yeah, I think by now you already have a solid system, so maybe just noticing it, adding it into your journal every time you see an order block, putting a circle around it, or I don't know, highlighting the order block. Would be the best way to go. Like this candle for well, maybe if we go to the 1 minute time frame. Right here, we're in an uptrend. That's confirmed. We take out a short-term low. We immediately turn around and we come back to retest that lowest down closing candle without a wick to the upside. And we turn around from there. This would be one of those examples that I just outlined right here. Take out the higher low right here, sweep that, ideally within 1 or 2 candles, turn around, leave behind a bullish fair value gap, come back to retest that lowest down closing candle. Ideally, it's just 1 candle, and continue higher from there. We just hit the next buy side target. Let's see if it's time to expand now. 405. Yeah, exactly. On a 5 minute time frame, we just have that, and it's not very obvious. That's why on a 5 minute time frame, if we are within a, well, essentially a confirmed uptrend, I would simply look for support on every down closing candle within the uptrend. Same thing what we did right here. Down closing candle, retrace into that, bullish engulfing out of it, we continue higher. Yep, looked really nice, not gonna lie. The only thing I would be watching out for now, since we trended up for an entire hour, is to potentially look for a retracement. We also closed above this 1 hour bearish fair value gap, so now we have a inversion fair value gap here. As for the retracement, either at 5:30, so that's not a lot of 5 minute candles until 5:30. Take out buy side and then turn around from here to retrace and retest that inversion fair value gap. Or if we continue higher throughout 5 a.m. at 6:15 or 6:30 to retest that specific area. No, this morning we saw really clean and easy to trade price action. Really nice. I think we had a very good stream. Any other questions? Anything else you want to talk about? Feel free to ask. This way it's more interactive and I have more stuff to talk about. Just quickly going to the bathroom. We'll be back in no time. 3, 5, 10. We keep on going higher. Open up with a nice volume imbalance. All right, feel free to send it in here. All right, let's see. Let me check it out. That was yesterday during the London session. We closed below the fair value gap. We took out some nice buy side liquidity. SMT divergence. Right, I'll let you write the message here. So essentially I entered with the lower inversion fair value gap because I see we had double fair value gaps. We can often invert the higher one and use the second one as support. So I went with the lower inversion fair value because I see we have double inversion fair value gaps. We can often invert the higher one, then use the second one, but then we close above the inversion fair value gap, so I close the position. That happened yesterday at the London Open. Let's check it out. No, this wasn't yesterday on the London Open. This must have been Wednesday's London Open. When was the screenshot from? Let me check. Tuesday? Wednesday. Right here. Okay, sorry, I looked at the New York session essentially. Took out Asia buy side. We had two inversion fair value gaps. Right here and right here. we close below the lowest one. We have nice set of equal lows and the Asia session low to clear. We have the London Open right here on this candle. After the London Open, we close below it. Well, I guess you did nothing wrong there. It's just, yeah, the timing essentially at just after London Open with the increase in volatility. Why we retested the higher inversion fair value gap. Why we invalidated the slower one. That's why preferably, if we look at this setup here, for example, you only have one key inversion fair value gap instead of two. Because if you have two, the chance is always there that we invalidate the first one while still rejecting on that highest one. That's the tricky part if you have two. Same, yeah. Most of the time, yeah, especially if you enter on the lowest one, is if you only have one major inversion fair value gap before buy side liquidity and buy side liquidity here. We only have one inversion fair value gap within this leg. In this leg, we already have two. Same thing if we have multiple fair value gaps. Right here, if we have two fair value gaps and you enter on that highest one, and we close below the highest one, there's still potential that we could bounce on this one. This is essentially our last line of defense. So even if we close below the highest one, we can still hold support on the lowest one. It's just easier if you only have, especially if you manage your risk based on closes above or below fair value gaps, if there's just one single fair value gap. And then the majority of this volatility came in with the London Open. Didn't sweep anything so far. We open up with the volume imbalance, so it makes sense. We just rejected this volume imbalance. We don't have any bearish fair value gaps here. We closed below, but that London Open volatility kicked in here, invalidated the lowest inversion fair value gap while still respecting the highest inversion fair value gap, and still continued lower. So I guess the best thing to do now, just looking at it from hindsight, would have been to maybe close 50% of the trade if you entered on the lowest fair value gap, inversion fair value gap, and see if we also invalidate this one. And that's just how you have to handle it if you have multiple inversion fair value gaps and you enter on the lowest one for a short or the highest one for a long. So right here, if we close below that, well, that could be due to a new 4-hour or 1-hour time frame open, where it just closes a little bit lower, but still essentially respecting the lowest fair value gap, and then still turning around. It's, yeah, I don't know, it's just much easier if we have a single inversion slash bullish fair value gap right here. Here we only had a single inversion fair value. Well, we could essentially say two, but they were in very close proximity. Those ones were a little bit further apart from each other. And also just around a crucial market open. London Open, and then we have the New York Open. Let's see if I can find another example where I can make it clear. Here, this one, for example, would have been tough because we have two inversion fair value gaps. Entering on the lowest one, where we know that we still have a bearish fair value gap just above, is tough. But once we close above that second one, which we did right here, we come back to retest it, then we have that confirmation it continues higher. This would be your early entry, because at this point in time, this could just be an indiscrepancy. We retest the VWAP, and we found a lower low. You'd be wondering, why didn't this play out? Well, probability is lower because we have a bearish fair value gap just exactly above the inversion fair value gap we entered on. If we only have a single fair value gap at this point, or inversion fair value gap at the low, like we did right here, we took out, now we didn't take out the Asia session low, but we had our change in state of delivery right here, from lower lows and lower highs to higher highs and higher lows, higher low, higher high, with only one inversion fair value gap of this leg. The next one, we don't have another bearish fair value gap within this entire leg. The next one would essentially be right here, but they're not above each other. That's the main point. The best setups, they usually happen with a singular fair value gap, inversion fair value gap. Same thing here. So we have one bearish fair value gap. We just took out the Asia session low. If we get in here, we don't have to look for major resistance until we all the way here. And that's already, if we get in on this discount, more than 2.5 points. That's already some significant movement. If the next fair value gap would be sitting, let's say right here, and we get in on this discount, well, there's potential for us to reject right here, especially paired with the midnight level. And we continue lower from there. But since the next bearish fair value gap is up here, more than 2 or 2.5 points away, well, makes more sense, or it offers a better risk to reward ratio essentially. And if we have, for example, something like this where we have a bearish fair value gap here, a bearish fair value gap here, a bearish fair value gap here, and maybe another small bearish fair value gap here, and we enter on that lowest inversion fair value gap, well, we just have a lot of bearish fair value gaps where we could potentially hold resistance and reject from. If we only have one, and it's at very low, and everything else has been delivered nicely, let's say, for example, we don't have this one, we don't have this one, and we do not have that one, well, then it's much simpler to push through all of this, and also easier for us to tape read. So looking at this specific example again, this wouldn't mean it's essentially invalidated. That's why it's nice to combine inversion fair value gaps with fair value gaps on that same leg. I mean, we had one here, we retested that on this candle where you close. We didn't retest that yet. Of course, that's, I understand it, on this candle, closing above the EMAs, not respecting your inversion fair value gap entry. There's also a little bit of fear incorporated or included in that exit. You're like, nah, I don't want it to hit my overall stop loss. It's already a pretty tight stop loss, enough to cover this inversion fair value gap, but it's also the London Open, so might as well close it here before taking the full loss. And that's okay. I mean, you still could have entered short again on the exact same entry that you've taken before, after we filled in and respected that inversion fair value gap, and eventually it would have hit your target. Yeah, look, perfect. Just gotta be very smart about managing your risk. Then it doesn't matter if you take an early exit or even an early entry. As long as you manage your risk wisely and you don't revenge trade, there's not much you have to worry about. Perfect. 515. So if we ask for it, now we have equal highs, and for the first, well, 15 minutes, initially we continued up. Next 15 minutes we continue down, maybe take out the slope before we take it higher from the 530 level to take out these equal highs. Maybe. Bearish SMT with NQ here. Looks like NQ is turning around, and on the new after taking out buy side. Did we close above the bearish fair value gap? Maybe by a tick or two here on NQ. Nice wick to the upside. Bearish engulfing candle. Nice. Yeah, we're getting a pullback. Like I said, I'm honestly not really interested anymore. I'm not going to take another trade anymore this week. I won't be here for the New York session, so I think I'm going to wrap it up here, unless you have any more questions for this one-on-one session. We had Bongo in here earlier. That's all for you. Perfect. Well, I hope you had a good week. I did. So, well, yeah, have a good weekend. Enjoy the weekend, and yeah, enjoy the time off. Oh, finally, not finally weekend. That might be the wrong expression here. But I'm glad there's it's not trading crypto where you would also check the charts on Friday and Saturday. I think risking 5 days per week is more than enough. Being a risk manager for 5 days per week. Yeah, same for me. That's why I moved away from crypto essentially over to indices and stocks or forex, because it's only 5 days per week. You don't have to worry about a major setup happening on Saturday, Sunday. You can just take off, recap your entire week, do some journaling, catch up with some stuff. Yeah, couldn't do that. Wouldn't do that again. So now we have equal lows and equal highs. That's just looking iffy. On NQ, we essentially have a market structure shift, a bearish fair value gap, 2 bearish fair value gaps essentially, no inversion fair value gap right here on that most recent move to the upside, and a unfilled volume imbalance right here. Gonna be interesting to see how that played out. We already caught that move to the upside. Don't really have anything else to worry about. Don't have to catch them all. Because now it's getting a little bit more interesting. Okay, where does price really want to go? Does it want to continue lower? Is it going to reverse at 530 and take out the equal highs? Right here, that was much simpler because we just took out major sell side. We started to disrespect bearish fair value gaps, flip them, now leave behind bullish fair value gaps, so we get in long and target the opposite liquidity pool. Right now, it's sort of that I want to make some more, but most of the time that's not working out, and you're just a little bit, yeah, I don't know, afraid to give away some of the profits you have already made. At least that's what it's like for me. All right, RM, take care, enjoy the rest of your day, and until next week, enjoy the weekend. Bye.